Hello, traders, and welcome to Explain the Charts. Today is June 16th, 2025, and we're diving deep into the S&P 500, ticker symbol SPY. We're going to analyze the latest news and do some detailed chart analysis to help you make informed trading decisions. First, let's address the news. According to recent reports, stock futures are rebounding after a Friday decline, but the Israel-Iran conflict continues to cast a shadow. Oil prices are rising amid these tensions, and investors are awaiting the Federal Reserve's interest rate decision on Wednesday. We also have the Vanguard S&P 500 ETF, which has had an average annual return of 12.64%, and SPDR S&P 500 ETF Trust, which has had an average annual return of 12.69% over the past 10 years. Some Wall Street strategists are boosting their year-end targets for the S&P 500 due to rising earnings estimates in the tech and communications sectors. Now, let's switch to the charts to see what they tell us. Looking at the one-day chart, we can see a long-term uptrend, but with some recent volatility. Notice the sharp drops in early April 2025 and late February 2025, followed by quick recoveries. This indicates strong buying pressure at lower levels, but also susceptibility to sudden downturns. Let's narrow in on a more recent set of candles. Here we're looking at the period roughly from the start of 2025 through today's present day. Since late May, we've generally been in a consolidation period, but since the end of last week, June 13th, we've tested some lower support levels. Let's look at the shorter timeframes and see the more recent details. Now, let's examine the 1-hour chart for a more granular view. On this time frame, we can see more clearly how price action consolidated over the last few weeks of May and into June. However, we can see how choppy the 1-hour chart has been, and we should proceed with caution. Let's look closely at just the last several days. We'll be watching the short-term trend lines on this smaller time frame. We will also zoom in using the 15-minute chart for today, June 13th, for a very short-term detailed view. Here we can identify short-term support and resistance levels. The support looks like it will be in the 597 range, while resistance will be in the 600 to 601 range. A break below 597 could signal further downside, while a move above 601 may lead to a retest of higher levels. In summary, the S&P 500 faces near-term headwinds from geopolitical tensions and economic uncertainty. However, the long-term uptrend remains intact. Key price levels to watch are 597 as a strong support and 601 and 603 as resistance. The likelihood of breaking below 597 is medium, reinforced if the Israel-Iran conflict escalates. The likelihood of breaking above 603 is low, unless we see positive news from the Federal Reserve or a de-escalation of geopolitical tensions. Keep an eye on upcoming economic data releases and Fed announcements, as they will likely have a significant impact on market direction. Thanks for watching Explain the Charts. Trade safe and stay informed.